in general, you've mentioned that there was a huge backlog actually for M&A of deals because there's been so much pent-up demand. Is 2024 the year where it all gets unlocked?
Yeah, I think right now it's, going into, let's say, the November Fed meeting, I think people were still worried about how high is up. And now most of the conversation is how quick do we come down? And, I think people are different on that. Some people think June, March, but most people think it's a matter of when, not if, and that the direction on rates is going to come down, and really that's going to unlock a lot of deals.
So where are the opportunities?
I think there's going to be a lot of things coming out of private equity. The amount of capital that's been locked up, it's been 2 years really that the market has been going through this wait on rates and this. So I just think you're going to have a bunch of portfolios that want to liquefy. And then also strategics have their plans. I mean, I think what's amazing, especially in the United States, is just how active and how aggressive strategics have and want to be on fulfilling their plans and their 5-10 year desires. And I think they're going to move on it.
But this is what, regionally opportunities, or is it sectors that you think
sectors.
will be unlocked?
I think you're seeing, the energy in the healthcare sector is stunning. The technology sector continues to create opportunities in a way. I mean, during the year, we took advantage of a situation and doubled the size of our technology team. When Silicon Valley Bank went down, we hired the whole team. But what was most startling to me is when we went through the coverage universe, there were literally hundreds of companies that I probably never heard of. That have been created and are sizable and are addressing markets that are very interesting.
You've hired 27, right?
Managing directors this year, yeah.
In 2023. How many more this year?
Well, I think we're going to keep going, but look, last year was the year to do it. We are in a funny world. The best talent in the industry is not available when you want it. It's available when they're available, and that's usually, it's hard to remember. We started the company in the 2008, 2009 crisis. And the reason we were able to grow so fast is because in that market, everybody was shrinking and scared. And we felt 2023 felt like a similar moment for us. Big banks were shrinking, pressure from their shareholders, capital needs. And we decided that we're in a good position. We're unlevered. We have a great culture. And we decided to grow. We expanded the firm by almost 20%.
But unexpectedly? So, do you basically swoop up, a good talent when they get laid off?
It's kind of unexpected because we didn't know Silicon Valley Bank was going to happen until literally 48 hours, 24 hours before it happened. And I was very proud of our team. We got together. I think we heard about it Thursday in the middle of the day that it was done. We were on the phone to that team by 5 o'clock, and we're trying to lift the whole team and bring it down to join us by the weekend. Took a little longer, but I was very proud of this. When you talk about culture, the ability to move quickly, see an opportunity, and in the face of what wasn't the greatest year for M&A, expand and move and get everybody on the same page. And I thought that was, we'll see. Now, I hope we're right on the timing of that bet, but I look, you have the talent forever. And it's very hard to get great talent.
So in terms of geographies, where do you want to expand?
We're sort of like 20, 21 offices around the world now. We've expanded a lot in Europe. Mm-hmm. And look, the dynamism, it'd probably be between Europe and the United States. I've always said, though, the dynamism of the U.S. economy, the creation of opportunity, you can't be big enough in the U.S. And I think in some of these sectors like technology and healthcare, media, the amount of innovation that's going on and change in direction that's going to happen and advice that they're going to need is going to be, it's going to continue for several years.
What's Europe looking like? I mean, it's gone through a rough patch for a number of reasons. Is it going to be better? Valuations look cheap, but maybe for a reason. Yeah,
look, I think Europe's going to be a little longer coming out of it. They might not cut rates. I don't think there is, they're thinking of cutting rates as fast, but there's still a dynamism there. I've been kind of the flow of capital into private equity in Europe and even private credit and some of the alternative pockets that have driven the United States to growth, I think Europe is catching up and is becoming pretty dynamic in that sector. And those usually promote change and trigger it. So I'm pretty optimistic about Europe.
What are you pessimistic about? So commercial real estate has, we've been talking about it for a while. Maybe it comes to roost this year. Anything else?
Yeah, look, commercial real estate's been a story now for a long time. I do think we're going to have trouble in the economy. Look, last year I was here and everybody was talking about recession and we didn't have one because it takes a while. I think it takes a while for 5% interest rates to slow the economy down. I do think the consumer might be out of gas. They've run through the COVID funds. I think we could have the economy, and especially the consumer part of the economy, be slower than we think. The interesting part of that is it's going to force interest rates down. So I think you'll see a good business economy, a good M&A economy. Remember, the M&A economy, we're involved in the transaction economy, went into a downturn well ahead of, we started 2 years ago. So I think that part of the economy will come out in anticipation, but I am a little concerned about that sometime in the next 4 or 5 months, I just think it'll be apparent that we're in a bit of a recession.
But what, like bubbles burst type of recession, or
no? I think consumer slowdown.
Okay.
Look, the China numbers. China is now a big part of the global economy, and I think the China number was up over last year, but last year was sort of the end of it was a low comparison period. I think and then you're going to see the wind down of the COVID money. Remember, there was a lot of money put in consumer accounts. Yeah. I think most people had that money winding down to zero by November, December. Yeah. Now, that was always a projection. I think it sort of extended out into January, February, but I do believe those excess balances are running down, and you're starting to see that.
So, Ken, as you grow your company, how much do you think about succession?
Well, because people like you ask me about it all the time. So
it's the first time I ask you, actually.
It's funny. I enjoy everything I do. The last year, growing the firm 25% in a bad year, in a down year, and using the instincts and the experience of having done it 15 years earlier. The trouble is, it's hard to, that's experience I had because I did it in 1990 when Drexel Burnham went down. I did it in 1999 when the tech bubble went down, and we did it in 2008 when the financial crisis happened. And so it's those kind of experiences that you want to bring to the table, and they're hard to get because they don't happen every 10 or 15. They just happen every 10 or 15 years. So we talk about it, but I think I'm still contributing and enjoying it, and 65 doesn't seem as old as it used to seem to me.